The next financial crisis will be much worse than 2008. It's simple to understand why. We have decided not to fix the issues which were exposed in 2008 and instead actually just paper over them. This has fully resulted in a guaranteed catastrophic end. When it happens and what will trigger it is unknown. Even in the Fed's most recent speech, Powell used the word, quote, trigger regarding their uncertainties about what will eventually create the next crisis. What Powell forgot to mention was that the Fed will be responsible for it. You came here for the truth, so let me unveil that for you. Today we are going to look at various economic indicators, various issues that I believe are important for the next financial crisis. So let's begin by taking a look at this article. Emerging signs of weakness in major economic sectors, including auto manufacturing, agriculture, and home building, are prompting some forecasters to warn that one of the longest periods of economic growth in U.S. history may be approaching the end of its run. There are more details in this article if you're interested. As always, I wanted to begin with this specifically to set the stage for the rest of this video. There are so many forecasters, individuals with an apparent crystal ball that are able to determine the future, apparently. And that leads me into my next article. Out of Reuters, world stocks tested lows at the end of October during a brutal rout that wiped off trillions of dollars of market value, driven by the U.S. trade tensions as well as the, quote, hawkish Federal Reserve. The recent turbulent sell-off in stocks is more or less over, according to nearly 250 equity strategists, but they mostly said that 2018 would end up a forgettable year with most markets set to finish off in the red. This shows us that you have a certain sector of the economy that they're looking at, and they focus in on that particular sector, and they have their blinders on, and they say, okay, well, the automotive sector is selling this many cars, and we expect this many more people to buy cars, and therefore we can expect these gains, these estimations are put onto their reports. But the truth is that there are so many moving parts that are never ever addressed. They only look at it as if the entire economy exists on a piece of paper or a computer screen. And of course, it's not like that. They never factor in the possibility of a bear market. They never factor in the possibility of a protraction. They're not going to look at it as if the market can go down. They only see bull markets. And if you've ever worked in this industry, you know how these individuals are. No matter how bad it gets, they're always trying to have a reason to pour more money in. Now's a good time. Now's the best buying opportunity. I remember an individual telling me in 2008, now's the time to buy. It's a good thing I didn't. Well, here they get into more issues talking about the fact that they didn't see it coming. And that's the whole point. They didn't see October and into November. They didn't see that happening. Of course not. Absolutely, of course not. They never do, and they never will. Wall Street economists think the stock market misinterpreted Powell and big rally was an overreaction. If you remember what happened here, the market rose over 600 points on the Dow Jones because they believed that the Federal Reserve wasn't going to do any more rate increases, or at the very maximum, December would be that last one. But if you actually read the speech, instead of just the one quote, and sometimes as they're using here in the third bullet point, they're only giving us a couple words because they know that people don't read. It's only a few pages. Just go through it quickly. Spend 10 minutes, read the speech, and then you can talk about it. And then you can trade based on that. But don't just read an article and think that, well, we got it covered. I know exactly what's going on. Don't worry about it. I don't need to read the whole speech. So you just read that one little word and it makes you feel comfortable. It makes you feel cozy. It's like being beside a nice fireplace, under a blanket with your hot cocoa. Well, here at the Money GPS, all we want is the truth. There's more details in the article but basically that's the reason I show you this. Let's get to reality. Deutsche Bank. Again, I don't know how many times I have to do a video about this. One after the other, getting involved in so many different scandals, so many different issues that are presenting themselves with this one single company. Obviously, it's a massive company. It's truly seeing downward force applied to it. Again, nearly 5% down on the day. So let's look at the actual chart. It's at 8.3 euro, and I couldn't believe, if we go to the 5-day here, that people were actually buying this stock. It has to be the ECB, because I don't know anybody crazy enough to buy this stock. But looking at it going back into November, it actually peaked over 9, if you can believe it. Who's buying this thing? It's crazy. But regardless, it's going down towards record lows. We'll see what happens in the coming days. Now, if we branch out to look at these different countries, every single one of them has a problem. But in terms of the amount of sheer debt, there is no other country that holds as much as the United States. Look at the total amount of interest paid on public debt each day in these G7 countries. We're talking about billions of dollars being paid every single day by the United States. If you tell me who this is being paid to and we can actually make sense of it, then we'll have a good conversation. Otherwise, I'm going to suggest 3 simple words: end the Fed. Now you're looking at the LIBOR. This is the 3-month, which is the most common. While we have the idea that the Federal Reserve supposedly is softening up, which if you read the speech, it's not the case. But if you look at this, in that period of time, the LIBOR has continued to rise. So that LIBOR rate, which is still accounting for over $200 trillion worth, $200 trillion worth here, ride on the LIBOR rate. So whether, in a few years from now it's not going to exist anymore, we'll see about that. But for today, 200 trillion plus riding on this rate. That shows us how important it is, and it's increasing. This is where it peaked out in the financial crisis at about 5.5% or so, and today it sits at nearly 3%. So it does have quite a little while to go. It doesn't have to get back to where it was before, obviously. It's not the way it works, but it's just showing you that along with the Federal Reserve and their Fed funds rate, they seem to be increasing as well. Looking further into it, you can see specifically what the LIBOR breaks down into, whether we're talking about interest rate swaps, whether we're looking at loans and mortgages and so on. This is all broken down. It's an important chart, certainly, just to give you an idea of the amount of money here. At the very bottom, it shows us the total US dollar LIBOR exposure currently right now, 199 trillion. That's in US dollar. When you look at this, I've seen numbers over $370 trillion, but at that point, it doesn't even matter. The number is so big, it's just a big mess. That's all it is. So looking at this gives you an idea of how important the LIBOR is and how much is actually trading based on that number. Bayer, the German pharmaceutical and chemicals group, has announced plans to cut 12,000 out of the 118,000 jobs worldwide in a bid to reduce costs and regain investor favor following a string of legal setbacks related to its Monsanto acquisition earlier this year. Obviously, this is regarded as the most evil corporation in the world, and for good reason. Both of these companies now joining forces. I can't believe it, but here we are. Anyway, you got to know the history of Bayer. There is no doubt about that. Read about it. Please do yourself a favor if you don't know already. And then we have Monsanto, which is not even going to go there. I refuse to cover this information now about what they're up to. I'm not going to get into it. I can't speak properly when I talk about it. Regardless, they have their own sets of issues. Now, this is, in a sense, I'm torn because I see this company, the most evil corporation in the world, 12,000 jobs are going to be slashed. That means the company's not doing well. In a way, I feel good about the company not doing well, but then I'm thinking 12,000 people are now out of work. That's not good. I've seen people getting walked out of major corporations, I'll say that, and it hurts. Person sitting right beside you gets walked out. It's not fun. But of course, we have to try and separate ourselves from the emotional aspect, look at the data. That's what I try to do here. And essentially what we have is another case, just like with General Motors, where they say they're going to fire people and then the stock will rise. I don't know in this case here. I didn't particularly look at this stock, but that's usually what happens, and that's basically what they're saying here, is that they want to regain investor favor. We'll fire a whole bunch of people, so please buy our stock, or please keep holding our stock. And that's really something that gets me, really upsets me. That's the way it is. So now, while this video may seem like a mixed bag, I do believe that the financial crisis part 2 will be a set of asynchronous events that will topple this thing down. It's not going to come from one avenue. It's going to be several factors all contributing to then pull this whole beast down to the ground. What I do believe will occur is that we will have deflation. We will have assets depreciating. People are going to get scared. People are going to lose their pensions. They're going to get their social security slashed, perhaps. They're going to lose a lot. And then people are going to beg. They're going to beg the government to fix it. They're going to protest. They're going to yell and they're going to scream. And then the central bank, Federal Reserve, and the other central banks around the world will come in, print up a whole bunch of money, and buy up assets. And we are going to not only give them permission to do so, but we are going to beg them to do it. What a genius, diabolical plan that they have contrived. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you found this video informative, I know you're going to find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. Check them out at the link in the description of the video. You can flip through them for yourself, and the audiobook is at themoneygps.com.